Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, in this video we're going to see a new chapter that is called Bank Reconciliation Statement. Now this chapter BRS, it is from financial accounts, alright? It is from financial accounts and it's a very simple and easy chapter. Why? Because there's nothing to do in this chapter. You just have to add or subtract. That's all. That's all you have to do in this chapter. You have to prepare a statement and you have to add and subtract. That's all. But the main thing in this chapter is that the students, they get very much confused in this chapter. Why? Because they see there are lots of cases, lots of types, 4 types are there, 4 cases are there. They get very much confused. But believe me, this is a very simple chapter. Why? Because once you understand the logic and the concept behind this chapter, right? And if you have the basic knowledge of accounting, then this chapter is a really piece of cake, Easily you can score full marks out of this chapter. So let's understand this chapter and let's finish off this chapter. Okay, just give me 20 to 25 minutes. All right, so let's start. So here is the meaning. It is a statement which is prepared to reconcile the causes of difference between bank balance as per CashBook and bank balance as per Passbook. So here, according to this meaning, we come to know that BRS is what? BRS is a statement. It is a statement which is prepared to reconcile the causes of difference. What difference? Difference between the CashBook and the Passbook. Now what is the meaning of CashBook and Passbook? See, CashBook means it is a book that is prepared by the business to keep the track of transactions of cash in hand and cash at bank. Okay, it will have 2 columns. It may have 2 or 3 columns also. There also may be a discount column, but we are not concerned about all that. Okay, we are here only concerned about the bank column. Okay, we are only concerned about the bank column because here we are talking about the bank reconciliation statement. So everything related with bank. So the CashBook is prepared by the businesses to keep the track of the bank and cash transactions. All right, and then the Passbook. What is the Passbook? Passbook means it is a bank statement. It is prepared by the bank to keep the track of the customer's transactions. All right. Okay. So now what will happen is there will be a difference between the CashBook and the Passbook, the balance between them. See, the bank balance, how much money is there in the CashBook will say something else, and the bank balance as per Passbook will say something else. For example, let's say on 31st December 2019, the CashBook balance, okay, says that 80,000 rupees is there in the bank account. But the Passbook, the bank statement says the bank balance is only 90,000 rupees. So you see here, there is a difference between these two. Now, why is it happening? There are lots of reasons for difference in the CashBook and Passbook. Okay, there are lots of differences. Okay, we'll see that later. So what happens is there will be differences in the CashBook and the Passbook, and it is important to reconcile those differences, to check those differences. Okay, so to check those differences and everything, what we do is we prepare the BRS, we prepare the bank reconciliation statement. The format is very simple. The particulars column will be there and 2 columns will be there, an inner column and an outer column. Okay, that's it. So it's a very simple format. You just have to add and subtract. We will see. But to do the bank reconciliation statement, one important thing is that you need to have the complete basic idea behind it. Okay, it's very basic idea. All right. So you have to have that logic and idea to do the BRS. So you need to understand the concept and the logic behind it. Okay, so let's see that. All right, so this is what BRS is. It is prepared to reconcile the differences between the CashBook and the Passbook. All right, so let's go ahead. Now, the first thing that I'm going to show you is the modern rules of accounting. Now, you'll be like, what? Modern rules of accounting? Come on, man. We know modern rules of accounting. We are not kids. I know you know modern rules of accounting, but I just want you to revise this, okay? That's all. So, let's just do that. So, what does the modern rules of accounting says? It says, whenever an asset increases, you debit it. And whenever an asset decreases, what you do? You credit, yes? So, this is what modern rules say regarding the asset. And what does it say regarding the liability? Whenever the liability increases, you credit it, and whenever the liability decreases, you debit it. Simple. You know this, right? And then income revenue. Income revenue is also like the liability. I mean, the rules are like the liability only. Whenever it increases, you credit. Whenever it decreases, you debit. Same with the capital. Capital is also like that. Whenever it increases, you credit. Whenever it decreases, you debit. And asset and expenses, same. Whenever asset increases, debit. Expense increases, debit. Okay, and whenever asset decreases, credit. And whenever an expense decreases, credit. But now in bank reconciliation, asset and liability concept is very important. Okay, these two concepts are very important. These two rules are very important. All right, so let's go forward. Now the second thing that you need to understand is the point of view of business as well as the point of view of bank. You need to understand both the point of views. All right, so to do that, let's take help of this example. Okay, let's say there is a business. All right, there is what? There's a business and it has opened a bank account and deposited 1 lakh rupees. It has deposited 1 lakh rupees. Now tell me, what is this money, this 1 lakh money to the business? What is this? This is what? This is an asset for the business. Why is it an asset? Because business deposited that money and it is owned by the business. The business has a right to it. So it is an asset for the business. The business will show on its balance sheet on the asset side, cash at bank, 1 lakh rupees. Yes? Yes. Fine. So it is an asset for the business. This money is an asset for the business, and the rules regarding the asset. Whenever the asset increases, you debit. Whenever the bank balance increases, you debit. From the point of view of business I'm talking about. All right, so whenever the bank balance decreases, whenever the asset decreases, you credit. Simple. All right, now tell me one more thing. What is this money for the bank? Is it an asset? Is it an asset for the bank? Now bank has this money in their safe, so tell me, is it an asset for the bank? No, it's not an asset for the bank. Why? Because bank is just storing the money. It is just keeping it. It is just safeguarding it. For the bank, this is not an asset because they don't own it. This is the money of the business, right? The business is what? Business is a customer of bank, isn't it? Yes, because business has opened an account with bank. So business is a customer and business owns that money and the bank is just keeping it. So for bank, this money is what? This money is liability. You understand? It is liability because bank doesn't own it, but bank is just keeping it, so it has to pay it back, right? Whenever the business demands it through ATM or POS or anything, demand draft, pay order, then what? Bank has to pay it back to the business, right? Or whatever the business say, pay to this person, like that. So the bank has to do that. So it is liability for the bank. All right, it is what? It is liability because the bank has to pay that money back to the business. Simple. Okay, so this is what is meant by the point of view of business and bank. Businesses see that money as asset and banks see that money which is deposited with them as liability. So deposits are liability to the bank. All right, simple. Okay, so regarding the rules of liability, whenever the liability decreases, you debit. Whenever the liability increases, you credit. Opposite with the asset, vice versa. Okay, simple, right? So bank sees that money as liability and business see that money as asset. Simple. All right, and then you need to know what is meant by debited and credited. See, the meaning of debited and credited changes as the point of view changes. From the business point of view, when the bank balance, when the bank balance increases, that means the money has been debited. All right, whenever it increases, you know, right? Whenever an asset increases, you debit it. So that is what I'm saying. If the bank balance increases, you debit it. Okay, debited. It means debited. Whenever they say in the question debited, that means it is increased. From the point of view of business I'm talking about. And credited means from the point of view of business, decrease in the bank balance. Okay, decrease in asset. And if you see from the point of view of bank, that money for bank is liability, right? So whenever they say debited, it means decrease. Their liability is being decreased. Okay, so the bank balance money is decreasing. All right, if the bank balance money is increasing, that means credited. Okay, so credited means bank balance money is increasing. Now I will give you a simple example. For example, let's say your friend did GPay to you or Paytm or whatever it is. Okay, and let's say the money directly went to your bank account. You will get an SMS, right, on your registered mobile number. Yes. So now what will be the SMS? The SMS will be like 5,000 money has been credited to your account by SBI or by Axis Bank, whatever bank it is. All right, so now bank is saying to you that from the point of view of bank, that 5,000 money has been credited. You see this? Credited. That means 5,000 has been added to your account. It has been increased by 5,000. So it has increased in your bank account, but the liability of bank is increased. Now whenever you go to ATM, let's say you already had 10,000 before, now your friend paid you 5,000, so now 15,000 money is there. So now bank has to pay you in ATM 15,000 rupees. So that is what it means, right? So from the point of view of bank, credited means increase and debited means decrease. And from the point of view of business, it's opposite, all right? Because they see it as asset. So when debited means increase and credited means decrease. Now you will be very much clear with this as we solve the problems, okay? It is very simple. I hope you understand this. It's very simple, okay? Now let's go forward. And then I need to clear about the cash book and the passbook. Now you know, right, what is cash book? Cash book is a book that is prepared by the business. The business employee, yeah, the accountant prepares the cash book. So it is from the point of view of business, all right? So this cash book has double column, okay? Cash column and a bank column. Now this cash book is prepared to keep the track of the cash transaction, cash in hand transaction and cash at bank transaction. But here in this chapter we are only talking about bank. So here we are only concerned about the bank column. We will ignore the cash column. It is not important to us, right? That is cash available at hand. This is cash at bank. This is more important to us, all right? Okay, so this is cash book. It is from the point of view of business. And then the bank. See, bank prepares a book called as passbook. It is a bank statement, all right? It is regularly sent to the customer, that is the business, all right? So passbook. Now the passbook is exactly opposite to the cash book. Why? Because business treat this 1 lakh as an asset. So here whenever that bank balance will increase, it will be debited. Whenever it will decrease, it will get credited. It is treated as an asset. But here in the bank, it is treated as a liability. So what? The passbook and the cash book will be exactly, it will be opposite. Why? Because the rules. See, whenever the bank balance will decrease, it will be debited, and whenever the bank balance will get increased, it will be credited. Fine. And then one more thing that I need to tell you about is that there will be some items that will be recorded in the cash book at a certain point of time. I'm talking about, okay? At a certain point of time, what will happen at a certain date, there will be difference in the bank balance as per cash book and bank balance as per passbook. Actually, they are supposed to be same. They are supposed to be equal, all right? They are supposed to be equal, but what will happen at a certain date, they will not be equal. The cash book will say in a bank account, we have 1 lakh balance. The cash book will say, for example, it will say we have 1 lakh balance, but the passbook will say, no, we have 80,000 balance. See, there will be difference between what cash book says and what the passbook says. There will be difference between the bank balance as per cash book and bank balance as per passbook. All right. So why this difference happens? That is because there are reasons for those differences. Due to timing differences, what will happen? Some items will appear in the cash book, some transaction will appear in the cash book, and some transaction will not appear in the passbook. Or some transaction will appear in the passbook and some transaction will not appear in the cash book. See, here there is reasons for differences between cash book and passbook. Why the cash book and passbook differs? See, items appear in cash book, but not in passbook, but not in PB, but not in passbook. See, what are those items? See, check issued. Now what do you mean by checks issued? Check issued means we are making a payment, okay? Check issued by business entity, not debited by bank. That means we have given the check to a customer, all right? Not a customer, to supplier, all right? To supplier, we are making a payment to supplier, for example. Check issued by business entity to supplier, for example, and not debited by bank. This means that the bank may take 2 to 3 days to clear the check, all right? But when we issue the check, immediately we record it in the cash book. We have made a payment to a supplier and our bank balance has decreased. So the cash book will be decreased. Okay, the bank balance will be decreased. But the passbook will only make the entry after the clearance of the check, isn't it? After the check is cleared, only then they will make the entry, right? So the bank balance in the passbook will remain the same, but in the cash book it will be decreased. So this is why like this there will be differences. See, the next difference is check deposited but not credited by the bank. For example, the customer paid us in form of a check. So that means check deposited. we will take the check from the customer and then we'll go to our bank and we will deposit it. That is what is meant by check deposited but not credited by the bank. But the bank has not cleared it, so the amount has not been credited by the bank. See, if the bank increases the bank balance, that means credited. So bank balance has not been credited by the bank. Why? Because it has not yet been cleared. So here check deposited, so here directly an entry will be recorded in the cash book. Okay, because we have received the payment from the customer, we have received the check and we have deposited it, but bank has not cleared it, not credited by the bank. Bank has not cleared it. That is why the bank balance has remained the same, but the cash book balance has been increased. Okay, cash book balance has been increased, the bank balance has been increased in the cash book. So like this, there will be many differences in the cash book and the passbook because of timing differences. It takes time to clear the check. Here there was payment, here there was receipt. Okay, we will see this while solving the question. Here I am just going through. Okay, then there will be errors. There can be errors. Maybe an accountant can record, let's say 1,500 payment was to be made, he recorded it as 2,000, or he can record it as 1,100, like that. Okay, so there may be errors. So due to errors also there will be a difference in the cash book and the passbook. Okay, and then standing instruction. What is the standing instruction? Now we can give instruction to the bank that on a certain date please make charity payment to a certain NGO. Okay, so those instructions will be immediately recorded in the passbook when the payment is made, but it will not be recorded in the cash book because the accountant might not remember when that payment was supposed to be made, but the passbook will be recorded and the bank balance will be decreased. Yes, when the payment is made, the bank balance will get decreased in the passbook, but the cash book will remain the same. You see, so this is how what will happen. This is how there will be differences. And standing instruction is also included subscription. If there is any subscriptions, then automatically the payment will get deducted, right? Payment will get deducted and the recording will be made in the passbook, but the cash book will not be notified or cash book will not be updated. So cash book will remain the same and the passbook will differ. So anything can happen. Okay, so standing instruction is like subscription, automation, payments, okay, charity payments. We have given the instruction to do automatic payments to the bank. Okay, that is what is meant by standing instruction. And then these are the items that appear in CB but not in passbook. And then there are items which appear in PB, okay, which records in the PB first but not in the cash book. See, for example, see, bank interest, bank charges. For example, bank charge some charges, penalties and all. Okay, ATM charges, may it be card charges, anything. So those charges will be recorded first in the passbook. Yes, so the bank balance will get decreased, the amount will get debited, but the cash book will remain the same. Here the bank balance is less, here the bank balance is more. You see, so this is how there are so many differences. Okay, then there are direct deposit, bills for collection, interest and dividend collected by bank. So there are lots and lots of reasons for differences arising between the cash book and the passbook. I hope you have understood by now how the differences arises. Okay, so now we will go forward. We will not see all the reasons because we don't have that much of time here now. All right, so we will go forward. Okay, and we will solve the question in the next video and we will see how to do that. Now, while solving the BRS problem, the main problem is the language. Now, we may not understand some terms and we may make mistakes. All right, so the first thing that you need to do is when you go on reading the transaction in BRS question, then first you need to identify the transaction which is there. Is it a receipt? Is the money coming in or money going out? It is a receipt or it is a payment. That is most important thing, okay, to identify whether it is a receipt or payment. All right, now I'm going to tell you some important terms which is there. See, deposited. Now, what do you mean by checks deposited? See, checks are very much important here because all the question will have checks in it. Checks deposited, check issued, like that. So here, what do you mean by check deposited? See, check deposited means we are receiving the check from customer or anybody. Okay, any debtor, from any debtor we are receiving the check. Okay, so here, for example, let's say this is business and this is customer, and customer is making payment in form of check. So now we have got the check, a paper form, a check with us, and then we will go to the bank, our bank, and will deposit that check. We will do what? We will deposit that check. Okay, so that is what is meant by deposited. So we'll deposit that check, and then what will happen? And then it will take 2 to 3 days to clear that check. Okay, it may also take a day also. All right, a day, 2 days, 3 days. Okay, or maybe a week also. Sometimes delay may also happen. So So what? It will take some time to clear the check, and then we are going to receive the money in our accounts. Okay, and then the bank will send an SMS to you. I'm just telling you that they will say the money has been credited to your account. Why credited? Because I told you, right, from the point of view of bank, when the bank balance increases, it is credited. Fine. Okay, so it will be cleared within 3-4 days, and then the money will be added to your account. This is what is meant by deposited. Fine. And then check issued or drawn. What does it mean? Check issued or drawn means we are making the payment in form of check. That means, let's say this is a business, this is a supplier. Let's say we are supposed to pay 5,000 rupees to this supplier. So we are making a payment in form of check. We are tearing off the slip of check, all right, and we are writing the supplier's name and everything, and then we are giving the check to the supplier. After signing and everything, we are giving the check to the supplier, and then the supplier takes it to his bank, and then it takes certain days, 2 to 3 days, to clear that check. And then what will happen? And then the money will be deducted from our account, right? 5,000 rupees will be deducted from our account. The money will get debited. Why debited? Because according to the bank I'm talking about, according to the bank balance will reduce, right? If it reduces, then debited. Okay, debit. Fine. So it will be debited, right? The bank balance will be decreased by 5,000. So here you can know, see, here directly we receive the check. Yes, we receive the check from the customer. So immediately we'll record it in the cash book. We will do what? We will immediately record it in the cash book. We have received the check, right? Our bank balance should increase. Then after depositing, I'm talking about, after depositing, we'll immediately record it in the cash book. The business will record it in the cash book that our bank balance has been increased. Okay, but it will take certain days to clear it. It will take certain days to clear the check, and then only the bank balance will be updated. Our bank balance will be increased by whatever the amount that customer paid to us. Yes, so it takes some time to clear the check. That is why there will be difference between the cash book and the passbook. This is the practical example I'm giving you here. All right, and then in case of the payment, see, for example, we made a payment, business made payment to the S supplier, right? So the check was issued. Now we have given the check to supplier. So immediately we recorded in the cash book that our accountant recorded in the cash book that we have made payment to the supplier, right? So our bank balance has been decreased. Our bank balance has been decreased by 5,000. In that example I'm talking about, our bank balance has been decreased by 5,000, but our bank balance will remain the same until and unless the check is cleared, right? Until and unless check is cleared, which will take 3 to 4 days or 2 to 3 days, right? And what if the S never presented the check within like a week or so? Then the balance will remain the same. It will not get deducted, because the supplier has 3 months for the check to go stale, the check to expire. You know that, right? Check expires after the 3 months of the due date. So S has 3 months to clear that check. So S can take that check to the bank within the 3 months. Let's say he took the check to the bank after a month. Maybe he went outside somewhere. Okay, so that can happen. So this is why there will be difference between the cash book and the passbook. Why? Because of the timing differences. It takes time to clear the check. Okay, whether it is a receipt or payment, there will be difference. All right, there will be difference between the cash book and the passbook because of the delay in clearing the checks and all. All right, so it will be recorded in the passbook after the clearance only by the bank. All right, but in the cash book, the interest will be made immediately, okay, from the point of view of business. So this is how the language is there. Receipt means deposited, deposited means receipt, and issued means payment. Okay, drawn also means payment. Check drawn, check issued means payment, and check deposited means received. So you need to understand the language of the banking. And this is also very important. Debited means according to bank that the balance is being reduced, and credited means balance is increased. And in the case of business, from the point of view of business, debited means cash has been increased, and credited means bank balance has been decreased. Fine. So you need to understand these terms, okay, this language, this banking language. Only then you can easily prepare the BRS. Now finally, here we have the format of bank reconciliation statement, BRS, bank reconciliation statement of ABC company, as on 31st December 2019. So here the date will come, and then there will be 3 columns, particulars column, an inner column, and an outer column. Fine. And then depending upon the question, you have to take the balance as per cash book. If CashBook balance is given. If the Passbook balance is given, take the Passbook balance. Okay, it depends upon the question. So balance as per CashBook, so you have to take it directly into the outer column, and then according to the technique and the logic that we are going to see, you have to add certain transaction and you have to less certain transaction. You have to subtract certain transaction. Okay, so let's say here there is 10,000, and let's say here there is 2,000. All this is 2,000. So let's say 200, 1,700 and 100. Okay, so this is equal to 2,000. So 2,000 will come outside. All right, so 10,000 plus 2,000, that is equal to 12,000. Yeah, and let's say all this is how much? All this is, let's say 3,000. How much? 3,000. So this 3,000 will come outside. Okay, 3,000, the sum of these three will come outside. Let's say 1, 1, 1, 3,000. So how much it was? 12,000 minus 3,000, that is equal to 9,000. So after doing this, if you have been given balance as per CashBook, then you will arrive at balance as per Passbook. If you have been given balance as per Passbook, then you will arrive at balance as per CashBook. All right, so this is how you need to do. It is very simple. Okay, we have already understood the logic and the concept behind it. Just the trick and the little idea is left, that we are going to see the technique. All right, and one more thing, there are types. There are 4 types in this. See, there is balance as per CashBook, how to do when balance as per CashBook is given, how to do when balance as per Passbook is given, and how to do when overdraft is given, when overdraft as per Passbook and overdraft as per CashBook. Now what is overdraft? See, overdraft means the bank will give the businesses in current account, who has current account, they will give the facility of withdrawing more than what they have in their bank account. For example, if you have a business and you are a business owner, and let's say you have a current account, then you can withdraw even if there is 0 balance in your bank account, in your current account. If you have 0 account, you can still withdraw 10,000 depending upon the facility. Okay, so you can withdraw and there will be interest on it. Okay, that's apart. So here overdraft as per Passbook and overdraft as per CashBook. So overdraft can also happen. Okay, and overdraft can also be given in the question. So there are 4 cases in this chapter, but don't worry, it is very simple. See, most of the students think there are 4 cases and the accounting treatment is also 4 cases. No, it's very simple. There are only 2 cases. See, balance as per CashBook treatment, accounting treatment, and overdraft as per Passbook treatment is same. Entire thing is same. This and this is same. Okay, the treatment, how to solve is entirely same. Okay, and balance as per Passbook and overdraft as per CashBook is also exactly same. Okay, don't worry, it's exactly same. We will solve this problem in the next video and you will see how easy this is. Okay, so it is very simple. Balance as per CashBook and overdraft as per Passbook. See this, balance and overdraft opposite, CashBook and Passbook opposite. Okay, this is same. And here also balance, overdraft opposite, Passbook, CashBook opposite. So this is same. Okay, it is same. We will see this. Fine. So if you start with overdraft as per CashBook, then you will arrive at overdraft as per Passbook. If you start with overdraft as per Passbook, you will arrive at overdraft as per CashBook. Fine. It is very simple. We will see this in the next video. All right. So this is just the format and we have seen the concept and everything. And the last thing that is remaining is the technique, what we have to do. See, the technique is very simple. First thing that you need to do when you get a question of BRS is identify what you have been given. Whether you have been given the balance as per CashBook, overdraft as per Passbook, balance as per Passbook, overdraft as per CashBook. Which balance or which overdraft you have been given, that you need to identify. It will be at the top or at the bottom of the question. Okay, so first you need to identify that, because with that only you will start the question. Fine, the solution. With that only you will start the solution. And then what you need to do, we will see this practically in the next video. Okay, you have to assign the left finger as CB. You have to write on your left finger CB, and here you have to write PB. Okay, and then you need to make it par like that. Okay, see, if one has been increased, one has been decreased, like that you have to make. Okay, we'll see that. Now we are out of time, and then you have to keep on checking the transaction. Okay, keep on checking the transaction, how the transactions are affecting the CashBook and the Passbook. Okay, sometime what will happen, something will be recorded in the CashBook. So let's say CashBook will be more, and the Passbook will be less. Then you have to modify, you have to change. So you can make changes in the book which you have been given. if you have been given balance as per CashBook, then you can only change the CashBook. Now what did I tell you? This is the CashBook finger and this is the Passbook finger. Fine. So if the CashBook is more and you have been given CashBook in one transaction, let's say CashBook is more, okay, CashBook has been recorded more, then you need to make changes in the CashBook only. Okay, you need to bring CashBook down like that. So we'll see that later. I'm just going through right now. So this is a technique. It's very simple. It's very simple. We will solve a sum in the next video. All right. So please watch the next video. In this video, we have seen the complete concept and everything. If you haven't understood, then please rewatch that portion of the video. All right. So this is the technique and this is the format. And we prepare the BRS statement to reconcile the CashBook and the Passbook. All right. Okay.